Mr. S. Subramaniam is Chief Financial Officer at Titan Company. He's joining us from Bangalore right now. Mr. Subramaniam, thank you very much for your time, sir. Good morning. Prashant this side. Before I get to your business and how the industry is looking, etc., I just want a quick word in from you on the union budget, which is just around the corner next Monday. Any expectations?
Well, not much actually for the jewelry business, as I can see it. Other than possibly the income tax rationalization over the next 3 years, which the finance minister has promised. I'm hoping some of that starts kicking in from this financial year. But other than that, while there's a lot of expectation that customs duty at 10% is very high, encourages smuggling for gold, I don't know whether any of that reduction is going to happen. So not much other than possibly on the direct tax side.
Okay, fair enough. Let's move on to how things are at Titan. Are things slowing down, Mr. Subramaniam, again, as compared to the last quarter, third quarter performance? And how much? That's right, Prashant.
I think quarter 3 was a very good quarter for us. I think we had some exceptional growth thanks to a few tailwinds or base effect as such. We had the golden harvest kicking in December, and then we had also the diamond studded activation, which we advanced by about a week, and that also contributed to the overall growth that we had of about 20% in the jewelry business, and that I think helped us have a very good quarter. And if you look at the same store growth for Tanishq alone, on a retail basis, it was about 30%, which was exceptional. So we had a strong Dasara Diwali season, along with as I said, the benefits coming in from both the golden harvest and the diamond studded activation at the end of the quarter. That helped us a lot. Post Jan, we've seen definitely a slowdown in walk-ins. We have seen that in jewelry particularly for the last 2 months. I mean, till now, at least in February, walk-ins have been far more muted than it has been in the previous quarter. So I think the point we are making here is that it's becoming very difficult to predict consumer behavior. You have a good quarter, and then possibly after that you might have a muted one. So one is just waiting. Hopefully there are a few reasons possibly why walk-ins have been low. One is possibly the stock market itself, which has tanked quite significantly post-Jan. And the second is apparently we do hear this anecdotally that people have been expecting gold prices to soften, or rather come off with the customs duty reduction being thought about from on the 29th February budget. So we don't know where that is coming from, but nevertheless, these seem to be some reasons why we believe customers are staying away. But gold prices, as you've noticed, have started inching up over the last month and a half. And if and when the budget is announces and there's no change in the customs duty, we would hopefully start expecting people to come back and start buying jewelry in larger numbers. So one is hoping that March should be better than what we've seen so far.
Many people that I speak with who track prices, technically, etc., they've been calling for a new bull market in gold. By the way, I don't know if you've heard that as well, but
yeah. No, you're right. I think there's a lot of speculation that gold may start rising substantially from now onwards, and that's largely because of the macroeconomic world situation, where I think growth is becoming very difficult to come by. Dollar is not expected to strengthen much, so gold is expected to start growing, and that could be something which could be very beneficial to someone like us.
What about the mandatory PAN requirement? Is that also a factor?
Actually, it's too early to get the impact of the PAN card. Anecdotally, what we hear is still more about an irritation that PAN is required when a purchase is made over 2 lakh rupees. And that's more coming from also people who are actually giving credit cards or making bank transfers. They're saying it's already KYC, now why would you want this again? So that's what we hear more anecdotally than actually people coming and saying, why are you asking for a PAN card? So we don't know how many people actually know about this rule as yet. So it's as I said, a little too early to understand what the impact of the 2 lakh PAN card is so far. But I think in a month or so, I think we should start getting a better picture of this.
When did this rule become effective, Mr. Subramaniam?
It was from 1st of Jan. The problem has been that the walk-ins generally have been much lower. So it's difficult to understand why walk-ins have been lower. Is it also contributed to some extent by the 2 lakh PAN card? We don't know. Yeah.
Yeah. No, and the cutoff is you got to produce a PAN card for purchases above what amount?
2 lakh rupees.
Right. So, and what percentage of your sales are, I mean, in whatever way you measure it, in terms of a transaction, etc., is above that threshold, above that limit?
We had published a note to the stock exchange and to everybody in concern sometime when this PAN card rule came, where we had said that the impact that we are seeing, or rather what we defined as the possible cash transactions which happen between 2 lakhs and 5 lakhs. See, above 5 lakhs was already there. So between 2 and 5 lakhs, we said the total transactions in cash were less than 10%. So obviously, if there is an impact, it is expected to be less than that 10%, because obviously many people would be bringing in cash because they don't have credit card limits. So it's not that everybody who pays cash would not come back and buy jewelry in the future. And those who are paying by credit card or any other bank transaction, we assume will not have a problem giving their PAN card number. So that was the number we gave. So it was supposed to be less than 10% of our total revenue. And of that 10%, of that less than 10%, a portion of that could be positively impacted. So the impact for us particularly, because our overall ticket size has been 65,000, it's much lower than the rest of the industry, is not expected to be very high.
You know, actually a high-end watch, this is anecdotal feedback. After this rule went into effect, I was speaking to someone in Delhi in large watch store, of course not naming names, but apparently sales were down some 70–80%.
Yes.
This is how
that is right. I think you're right. I think there is an impact on the watch business as well at the high-end level, yes.
Yeah. All right, fair enough. So we should expect single-digit growth numbers, volume growth numbers for foreseeable future?
I'm not giving. We don't give guidance. We don't give guidance, as we said, and we will be growing this quarter because we have the golden harvest base. Coming up for things, so there will be a growth. The only point is that I think the growth is going to be muted, or rather lower than what we had estimated. At the end of December. And then December, it looked as if things were looking very good, and customers were really back. And with that strong growth that we saw in Tanishq, we were quite bullish. That's not happening. That's the point we are making. But there will be a growth, and we are not giving guidance for next year. I think next year is still a long way off. We would want to wait and see how things pan out.
What about the
I think the
GST?
reference to the single-digit growth is more. Sorry, I think the reference to the single-digit growth, if you are talking about that, is more to do with watches than it is to do with jewelry. Volume growth, if you've seen in watches, has been actually flat over the last couple of years, and I think the reference is more to watches volume than to jewelry, because jewelry really volume is not really as relevant as the value is.
Yes. Watches. Yes. No, that was watching, but overall things will remain pretty subdued, right? I mean, should expect it to remain subdued.
No, we should grow because we would have the golden harvest kicking in as far as jewelry is concerned. Watches has been muted. That has been the issue because the last few years growth has been tough to come by. We are also hopeful at the same time, having introduced the smartwatch and maybe a few more things coming up. Interesting collections and some technology offerings from our side coming up in the next 2 quarters. So one is hoping things will pick up, but watches has been muted. But eyewear has started picking up quite well from January. I mean, it was muted for the last 2 quarters, but we are starting to see a reasonable growth, a decent growth actually, quite decent from Jan onwards. So one is hopeful that other things start picking up. Watches might still be possibly a little muted.
What is is there clarity now on this? We've discussed this in quite some detail when the GST recommendations were announced. Is there clarity now on how gold will be taxed, Mr. Subramaniam?
Absolutely not. Absolutely not. I think it's the GST Council which will decide that. The recommendations from the committee was about 2 to 6%. It's still early days. We don't know how things are going to pan out. When we would obviously be hoping it will be at the lower end of this range, because generally today VAT is about 1%, so 2% should be something we should be hoping for. Yeah.
But the recommendation was about 4 to 6%, right? From the current
it was 2 to 6%. The range was 2 to 6%. That was the recommendation. 2 to 6.
Okay. Okay. From current 1 to 1.16 or so. But it's pretty. But it's pretty clear, and I've heard this from many investors, Mr. Subramaniam, that and react, if you will, that the government doesn't like gold. Why would you want to bet on a business which the government is actively trying to kind of rein in, control,
we do understand
what you want
the government's,
to use?
No.
Let me read out from the report, the GST report, the recommendation, and I quote: "It is inconsistent for the government to actively promote schemes, gold bonds, gold monetization, etc., to wean consumers away from gold on the one hand and also give highly concessional tax rates to buy gold on the other. For all these reasons, these commodities should in principle be taxed at the standard rate. Standard rate is 17-18%. Instead, they're taxed at 1.6%, center plus state. And hence, they should be increased to at least, as you said, 2 to 6, right? But the thinking is very clear. Directionally, it's very clear. They're saying it should be taxed at standard rate.
No, we understand that. And we understand that. The issue here is that in the case of jewelry, please don't forget that the metal cost or the input cost is predominantly, it takes 80, 85, 90% of the overall cost of the product. Okay? And I think as a pass-through, it's pretty much a pass-through. The making charges and labor charges are very, very small. It's a very low margin business. Taxing it higher is only going to possibly wean customers towards the unorganized players who will be able to possibly not tax, not pay, not give invoices, bills, not account for their sales properly. And I think that would be something disastrous for the industry as well. Let's not forget the number of people this industry employs. Forget the export part. The export is an important thing, but even other than that, the domestic part is a very, very important constituent of GDP as well. And the fact that culturally, I mean, we buy jewelry for occasions, and that's something that I don't think the government will be able to stop really. Now, having said that, we are in favor of the monetization scheme working well. Our ability to recycle the 20,000 tons of gold that we think we have in our homes, that would be something which would be fantastic. And if we can do that, I think all these issues should be behind us. So if we can only get our act right on the monetization scheme and the bond scheme, we should possibly be able to go through that CAT situation in the future as well. So I only hope that these things work.
Mr. Subramaniam, thank you very much. Good speaking with you, sir.